How do you go about getting a mortgage or property loan with bad credit in Canada for 2023? What's going on, everyone? My name is Andrew, and on the topic of getting a mortgage with bad credit or no credit, how are you going to go about doing this in Canada for 2023 if you want to get into the real estate market? I can tell you from experience as somebody who started off in construction and wasn't able to qualify for a mortgage because I was getting paid cash. It is challenging, but there are ways to go around it. The first option is B lenders. I think what you need to know is what it is that they're looking for and how they consider things, and every B lender is going to be a little bit different, which is why it's important to have a good mortgage broker who knows how to present you in the right light. When someone is looking at whether or not you can afford or pay for a mortgage, they're really looking at you to prove to them that you have a reliable source of income. I have to say a legal source of income that you can actually have in place to pay your mortgage when bills come due. So for contractors and people who are working other cash jobs, as long as you can show a consistent revenue stream that looks reasonable in the scope of your profession that you have stated, or if you have additional incomes from other family members that you also want to roll in there, whether or not those are off the books or on the books, B lenders are more likely to consider this as self-declared income, and it's something that you can use to bolster your credibility and your accessibility to be able to qualify for the loan. But you got to understand that they're still going to look at a lot of things like what is your credit. They're still going to stress test you to a degree to see whether or not you do in fact qualify and you're not going to be a bad risk. So you really have to look at yourself and say, would I lend me money? And if the answer is yes on paper, then you can probably go to a B lender if you can't jump through all the hoops that A lenders require you to. But you have to understand the downside of that is that you're going to have certain problems, like if you ever want to break a mortgage with a B lender, their fees are pretty expensive and they're not going to be very kind to you walking out on them if you do decide to break. The interest rates are also going to be a little bit higher, but they can still be quite reasonable if you are just trying to get into real estate for the first time, looking at buying a reasonably priced property. The second option we're going to talk about is private lenders. I really only recommend that to people who are really controlling the situation that they're trying to get into. Like, for example, because we talk about it all the time, house flippers. Or if you're a contractor or somebody in the trades that wants to buy a property, fix it up, and then refinance it, you just have to make sure that you have a plan, you're in control. But just remember, private lenders like B lenders have higher interest rates, lender fees, and breakage fees. But the breakage fees with private lenders are a little bit easier in my opinion, just depending on the terms. But you got to make sure to read the fine print so that they're not giving you a hard kick on the way out. The next one we're going to talk about is capital raising. Now this one in general is something that not a lot of people feel too comfortable about because it essentially is going to individuals that you might know. You're asking them to lend money on a property. People should know who believe in real estate that there's probably little to no risk to this investment if they're buying the property at a fair value that is not likely to go down, and you as the owner are actually going to be paying some kind of interest on that property, and maybe they all profit share. The next option we're going to talk about is vendor take-back mortgages, or VTB for short. VTB in a nutshell is when the seller of a property that you're looking to buy is willing to be the bank for you and hold that mortgage instead of you having to approach a bank. But the problem with this is that you can only really do this in situations where you find a seller who has enough equity in the property and not a high mortgage that they need to pay off. And the next thing I want to talk to you guys about, which is my favorite strategy for real estate investing in Canada for 2023, is partnerships. If you have little to no or bad credit and you still want to get into a property, buy something and go with an A lender, you can partner with somebody else who does have good credit. Or even if you're partnering with people who don't have as great credit, but maybe you're all kind of on the same level and don't have the strongest incomes, you can amalgamate incomes into this partnership and qualify for better mortgages. This is actually a very versatile option, and as long as you have friends, networks, connections, somebody that is willing to bet on you and you can bet on them, this can be a very viable way for you to break into real estate in Canada for 2023. These are the options that we will consider in 2023 if you're working with little to no or bad credit. Let me know what options you would pick, and if you want to know more about real estate investing, check us out with the links below, and I'll see you on the next one.